Hi, everybody. Welcome to review of Procter & Gamble's first quarter earnings. I'm Nolan Kamer, a wealth advisor, and with me is research analyst Kyle Moore. So it's been a busy couple of weeks for Procter & Gamble. The proxy vote is finally out of the way. Investors voted in favor of the board, keeping Nelson Peltz from getting the seat that he desired. And getting past that, expectations had started to move up a little bit heading into the first quarter earnings results, with many people thinking management was going to come through and really wanted to show Nelson Peltz that their strategy that's been in place is starting to work. Unfortunately for investors, that wasn't the case. The results were a little bit weak and disappointing. And it wasn't across the board, but a lot of the challenges remain here in the U.S. So Kyle, if you could talk a little bit about some of the headwinds that the company is facing here in the U.S.
Sure. So organic growth for the U.S. was basically flat for the quarter. Some weakness in grooming specifically. I think that was down 6%. It's largely driven by the pricing pressure from the cost reductions that they've taken in their razors business over the past few months. So not totally unexpected there, but still, growth has been weak, and have seen some analysts use the word disconcertingly perplexed to explain the management's view of their inability to explain exactly what's going on in the U.S. And during the call, they threw around a couple of plausible scenarios, and then they proceeded to say, well, but we don't really think those are what's driving the weakness. And so, the takeaway from that would be is that it sounds like it's a consumer packaged goods industry-wide phenomenon, and for some reason, consumers just aren't spending as much in these categories right now.
I would say that P&G's management team probably isn't the only one in the industry trying to figure out what's going on, because we've seen a lot of other companies under pressure in this space as well. But all wasn't lost with the quarter. We did see some signs of life starting to sprout internationally. Can you talk a little bit about those areas, as that's been a big focus for P&G recently?
Sure. So China grew 8% for the quarter, which is a very solid number. And if you recall, for the past several quarters, we've been kind of pointing to China as an area of focus. And the reason being is that it's such a big opportunity. And given the anemic growth elsewhere, you want to be capturing share in a growing market. And that's the way to be able to grow faster than the 2 to 3% that they've kind of been delivering. So it was good to finally see some execution there. They released their new diaper product, and that was taken up pretty well. And so, the trend seems to be in the right direction. And they actually recorded the conference call from China this quarter, which is something I've never seen them do, and actually had some of the business heads talk about what exactly is going on. So a bit of a bright spot. And, as we've said for a while, that's kind of key to helping get that top line momentum that investors are wanting to see.
Good. And then finally, what type of guidance did they give for 2018? Does the guidance seem like something that they can achieve? And also, with the stock off a little bit since the last quarter, provide a little bit of insight into kind of the outlook with in terms of the stock price as well.
Sure. So they guided to 2 to 3% organic growth on the top line. That's going to be largely driven by emerging markets. I think that'll translate to about a 5 to 7% bottom line, so operating income growth, which is pretty solid, not outstanding, but moving in the right direction. Think execution is going to be key. You'll likely see continued pressure from Peltz, and I think management is going to continue to feel that pressure to maybe accelerate some things on the cost side, and just to keep him at bay a bit. But with the stock down 8% since the quarter, it's trading about 20 times earnings. Stock is starting to set up a little nicer, just from a valuation perspective. But at the end of the day, they still do need to see that momentum in the top line so they can actually get some operating leverage in the business and start growing earnings again.
Good. Sounds good. So we're rooting for organic growth. Let's get it accelerating again, and we'll get that stock moving back in the right direction. Appreciate the insight and time today, Kyle. Thank you.
Sure.
Mariner Wealth Advisors is an SEC-registered investment advisor with its principal place of business in the state of Kansas. Registration of an investment advisor does not imply any level of skill or training. For additional information about Mariner Wealth Advisors, including fees and services, please contact Mariner or refer to the Investment Advisor Public Disclosure website at www.advisorinfo.sec.gov.